What if I told you that the bank and institution do not trade like the retail traders? In fact, the retail traders lose money while the smart money traders actually gain consistently. And the reason why this is happening is because of the concept which is called the smart money concept. In this video, I'm going to break it down for you on how to understand this concept. Come along with me, let me show you how it works. Sure. I want you to understand the change of character, and I'll also tell you what you need to know about the swing point. From the first part, which is the trend, when you see a trend moving upwards this way, creating a new higher high and higher low. The higher highs and higher low, they guarantee that the trend is shifting the trend from downtrend to uptrend. So here is our breaker structure in the uptrend. We have the breaker structure at this point because this is signaling that the chart is moving to the upside. All right. So this part here is a higher low. This part here is a higher low. This part here is a higher low. All right. And this part here, the breaker structure is still the higher high and the BOS at the same time. Okay, this part here is the higher high and BOS. This part here is the higher high and the BOS. So when you see a trend going up or uptrend like this, creating a new higher highs and higher low, and it's shifting to the upside, then it's definitely the uptrend. And when you see the trend moving to the downside, creating a new lower low and lower high, okay, it definitely means that the trend is shifting to the downside. So the lower low is still the BOS in this part. Okay, the lower low is a BOS. The lower low is a BOS, right? And here is a lower high. Lower high at that point exactly is a lower high. Okay, when the trend is shifting to the upside, creating the new higher highs, higher lows, this is the uptrend. And when it's creating the new lower low and lower high, this is the downtrend. All right, there's another trend called the ranging trend, which can signal equal highs or equal lows in the same level or at the same level. So at this point, you might want to draw a line at the top here and another line at the bottom here to signal the support and resistance. So basically, I can say that this line here, the top line here is my support line, it's my resistance line, and the down one here is my support line. Because the charts or the pattern of this is just going sideways and it's not going below the support line, it's going above the resistance line. So this trend here is called the ranging trend. You can call it the ranging trend, and you can also call it consolidation trend at the same time. All right, so what is the breaker structure? I've explained the breaker structure to you, that this part of the charts in the uptrend, the higher high is the breaker structure, and the lower low the downtrend is the breaker structure. So when you see a breaker structure, you should be able to understand that when the trend is coming down and you're signaling the lower low is a breaker structure. Okay, so what is the change of character? The change of character is when the trend is moving to the upside, creating a new higher high and higher low, that suddenly you saw a trend or you saw a chart that is canceling out the higher high, the most recent higher high and the most recent higher low to the downside. Okay, this particular candle is a change of character candle. It's telling you need to be careful that the trend is definitely coming to the downside, possibly to tackle out this second higher high or the second higher low before reversing to the top, or when you see it canceling out the most recent higher high and the most recent higher low, then this is the change of character. Also, when you see a trend coming down, creating a new lower low and lower high, suddenly you saw the trend reversing to the upside to cancel out the most recent lower low and the most recent lower high. At this point, this is the lower low, this is the lower high. When the chart suddenly reverses and cancel this recent lower high and the recent lower low, then this is a change of character. Okay, this is a change of character line. So you need to be very careful as well when you see this, because it's telling you that we might be going to the upside and no longer coming down. For the sideways, there is no change of character for the sideways. So there's no way you can understand any change of character in the sideways, because it moves sideways like this. And another thing you need to understand, that it can move sideways in the horizontal form, or it can move sideways like this. And you might not be able to figure out if it's going to the upside of the chart or it's going to the downside of the chart. It can go sideways like this in series of hours or series of minutes and boom to the downside, or shoot it up to the upside. Okay, you have to be careful when you see this sideways range. So most times you can see it this way, horizontal, and you can see it moving in sideways like a wave to the upside or to the downside of the chart. Before we go into the live example, have you ever heard about order block? Order block is the last bullish or the last bearish candle before the strong upward move or the downward move. Okay, the smart money gets into this zone because that is where they actually make their buys or their sells in the market after picking up all the stop losses. Strong move in the opposite direction. It shows where big banks and institutional place their trades, and also it often comes back to that zone before continuing the move. So when you see a bearish order block, for example, we have two types, which is a bearish and a bullish order block. So in a bearish order block, you look for the last bullish candle before the big drop. So it's most likely the trend will be coming in series like this, creating consolidation or series of candles like this. And after that, the next thing you're going to see is a down push. All right. That candle that make that sell is the order block candle. Okay. Because at this zone, there's definitely a last candle which is going to push the whole trend to the downside. So this is the bearish. Order block. And for the bullish order block, it can be at the bottom side of the chart, creating a series of candles like that, and boom, to the upside. There's a particular candle which will be the last candle before that push to the upside, because that's what you should be looking out for, because that candle is where the big banks are actually entering from. So right here is the bullish order block. Moved too quickly and didn't trade fairly. So this means that there's always a gap when the prices do not trade fairly. What is a fair trade? A fair trade is when you have a buy and sell consolidating, or when you have a buy and sell happening in series of areas or in series of the chart. So what is the fair value gap in the bearish fair value gap example that you can see on the screen? For the bearish fair value gap you can see on the screen, you can see the first candle is this very particular bullish candle, and we have another bullish candle, we have another bearish candle, we have three bearish candles that are consecutive in the trend. All right, so the gap at this point, that is the beginning of the gap at the end of the candle 1, and at the end of the candle 3 you can see that there's another gap at this point. There's another gap at this point. All right, so if the middle candle is big and is wide, and the wick of the candle on the other side do not touch it, this means that this is a fair value gap. Automatically, we are expecting trades to come into this place to just trade like that so that we can have a fair trade, but that is not happening, and that is why it didn't give the charts, it didn't give the trade a good example for the buyers to enter. So because this is a bearish fair value gap, you'll be looking at the price to come to fill this imbalance. The price will definitely come to fill 50% or 60%, but most of the time you can see 50% coming to fill the 50% of the gap before reversing to the downside. All right, so because this gap acts as a magnet for prices, smart traders use it for entries and to take profit, because it will definitely come to fill it. Because why do we have a gap is because they're leaving that place open for future coming. All right, so when you notice a bullish fair value gap in this sense, you can see that the price keep a particular area at this point. So at this place, you can see we have the candle 1, candle 2, candle 3, which are all bullish. And this particular side, you can see this is the end of candle 3. That is where we are marking for the bullish fair value gap. We are not marking this. Okay, we are marking the end of candle 3, which is this point. Candle 1, candle 2, and candle 3. So this created a fair value gap. Okay, because as it is going up, we're expecting the price to come to reverse into this 50% of the candle, or maybe 80% of the candle, or 100% of the candle to fill that zone. It will definitely come to fill the zone before pushing to the upside. All right, so when you notice the candle creating fair value gaps, it will definitely come to fill the imbalance, because the fair value gap gives a clearer view of price action, and it is not just a footprint of institutional traders. It is actually the spot where they are coming and waiting for price to come in the future. So when you combine these with market structure and other blocks, you'll be trading like the smart money, not against the smart money. Important concept in the SMC, because it is one of the most widely used in the trading world. Supply zone is an area where sellers are likely to enter and push the market price to the downside of the chart. So where the price drops strongly in the past is the supply zone. Okay, because if you can see this very well, you can see that the price pushes to the upside and have a drastic drop. Okay, creating internal break of structure and creating internal lower high and internal lower low. All right, I can mark this here as my supply zone. Okay, this is my supply zone, and because this is my supply zone, I'll be waiting for price to come to retest this zone, because price will definitely retest this zone because it's at a strong area of the chart. The price was very expensive at this zone before pushing to the downside of the chart, creating lower high and lower low. And after this point here, you can see that there's a reversal to the upside of the chart. All right, and from this point you can see that the chart passed through the supply zone. Let me tell you that this area is where the retail traders are trapped in, because we might be thinking the price will continue to push higher, not knowing that the price is very expensive, and we are looking at to sell when the price is very expensive. So there are a lot of stops at this point. We have buy stops at this point. Right, and this is the point where we'll be looking at taking a long position at this point and looking at short positions, or maybe looking at our stop loss somewhere here, looking at targeting maybe 1.6, 1.5, 2.0, and the price will definitely boom to the top and reverse to the downside, and you'll be stopped out. We don't want that to happen, because you need to be very careful when you're looking at a supply zone. Sometimes you can see a strong bearish move after a consolidation. That is where the supply zone occurs. All right, some consolidation can be in this form. Sorry about the screen. Some consolidation can be in this form. Okay. Some consolidation can be in this form, whereby you can ask consolidation in this form as well. All right, provided you can notify the swing, okay, where the swing is starting from and where the swing is ending. You need to be very careful at this point. Okay, we want to trade at a particular area where we are going to have a very good advantage in the market. That is why we want to trade the supply and demand zone. It's one of the most important concepts. Okay, it is often found at the top of the swing high, at the top of the charts, because that's where the chart is very expensive. So you need to mark the area that is very expensive. So the chart can come and form consolidation at this point before reversing to the downside. Okay, that is how the supply zone works. And for the demand zone this is an area where the price is likely to push the price, where the traders are likely to push the price to the upside of the chart, because you can see this is my demand zone at this point, because the price is very, very less expensive at this point. We have a downward push to the downside of the chart. After that, we saw price creating a new higher highs, internal higher high and higher low, before reversing at this point to the downside. So this push to the upside is quick liquidity of all the chart at this zone before reversing to the downside. Now, if you can see, as the price reverses to the downside, we can see another clear out, because this is where the smart money traders are actually found. Okay, you'll be thinking the price is coming down for short position, and you might want to take your profits at this somewhere here, and your stop loss maybe somewhere there, looking at 2.0, 1.9, 1.5, depending on your risk appetite. And the price is definitely going to push down then to the top, because at this point here it is very, very less expensive. So you always have to look out for a pullback from this point. Okay, you need to combine these with the market structure to make it very, very respectful, and don't trade blindly in the zone. You have to wait for the confirmation, like a reversal candle or market structure shift, because the supply and demand zone is more than just drawing boxes. It's about understanding where the smart money buys and where the smart money sells. So when price returns to this zone, it is not random, it is strategic, because that is how they do. Before they buy, they actually sell first. They'll sell, create consolidation to the type, go down, then do the buy. That is how they work in the market. So combine this strategy with the liquidity, with the fair value gap, and see how you're going to work your way out in the system.